I hope you're well. I'm going to do a review of what the price action of the FOMC was like since the report came out. We're going to emphasize, as you know, the best ally of this system is volatility, so we want to see what happened since that injection of volume that occurred. We'll also review a bit about what the market was doing. As you know, in the topic of market profile, we know that we can predict a kind of consolidation prior to important news reports, with this one probably being the most important for the macro topic and longer time frames of those who operate by positioning and the big investors. So it was to be expected, as I mentioned in the previous review, that this would happen on Monday and Tuesday, and especially on Wednesday morning, when we had this consolidation. And once the report came out, the distribution took place in the market's direction. Had to do it with the report that was there. Now, well, what we had previously, we came from this positioning that the price was doing around here. Due to this, that I have repeated to you so much. What is this one responsible for breaking another? Responsible. And this responsible was responsible for breaking this other one that had broken another one here. Look how everything is chaining together. So we had this, the price closed, the market that day around here. A distribution from this responsible person. And from here, all this positioning starts. That's why the price stopped here now on Wednesday morning, when we had here prior to FOMC. You know, that directly, when we arrive at the market, we see the reversal points, and we begin to ask ourselves the usual questions of where the price is coming from, and where it might go, based on what it's doing at that reverse point, where we have a very clear rejection, as a result of looking to the left, where we have an origin, clear structure, and it is from where this whole downward movement happened before reaching this other one. And look what happened here. How beautiful. The trap that I show you price comes close to a level, doesn't touch it, didn't touch anything else significant here. The closest thing was the level. So there's the trap, adding the top of that 50 from that origin, plus the rejection we had here. What we want is to expect a shot from the good ones. That's why the downward movement in the morning. And we arrive here again at the origin. And this is our swing zone. The lowest point between two new highs marks this swing zone, which hits the rejection price from another time frame. Remember, when the price doesn't move with displacement of a swing point, I am constantly looking at other time frames to see how this closes. Example was the time we were here with this other rejection at all-time highs, that in lower time frames there were closes here, but in 1 hour this got back into the range. So I always want to see how the price is closing in other time frames. Well, then the price settled here in the morning. Now what do we have here? We had to see why the price gets here and retraces. What do we have here? A responsible one, right? And this hidden is responsible for removing that responsible one. We were seeing in 5 minutes the rejection, and we found that this hidden is in. and is also in 5 minutes. And that other one that was down here in 1 minute is no longer there. Multi-temporality confluences. See here in that in DI but in 5 minutes, the responsible for breaking the other responsible is still there, a lower temporality. We take a midpoint, and there's the tap on that, responsible for breaking a responsible. So of course the price reaches the limit, taps it, and goes back again to the origin. So the price in the morning, doing this ping pong waiting for the release of the news. That's a bit what was happening in the morning hour. Let's go directly to what the report left us. 6th, and the news comes out here. We mark our highs and our lows. In this case, as we are so bullish, we will work with the highs for now. All right. The news comes out, and we want to see here what the price reacts to. Let's see. This is the first high of the most recent swing zone we are working on. We are going to mark it right away. What do we have here then? The one responsible for breaking that area, so the price continues to rise and leaves that unmitigated responsible over here. We had already marked the other high, so it continued here. All this, so it doesn't get in our way. All right, the movement arrived. Up to where around here? To an origin from another temporality. And what is this? It's the high from the one responsible. That's the one responsible for clearing away. This area responsible, again, the same logic, and the price had returned to it, in fact, and had given us the continuation. So, these are areas we need to conserve. The price reached that responsible area. After clearing that, it ends up mitigating, turning into a double top. And that's what helps us to come make this movement up to here. Let's see how it unfolded then in seconds, that price action. Alright, we have here the one responsible for clearing us out of this high from the 1 minute swing zone. We left, and the price continues all the way to the person in charge. We just stop until it comes over here and makes this change of structure in this temporality, simply to come and cover the responsible. We have left unmitigated 30% perfectly, and leaves us this change to come to 50%. Then from the change varies, and that's where it starts to make this market profile between an order flow and a structure change. Now look at this rejection. This rejection must take that, the high of that displacement law. This, and between it being close to 50%, You already know that this is a liquidity target, and we don't want to take aggressive trades when the price returns to the previous, responsible to the responsible for taking out this low, because we didn't have a close with body. If we didn't have it in that temporality, in 15 seconds, no more likely, it will not be in a minute either. Well, here in a minute, there was also rejection, so it came to do the tap to 50, and in a minute, it was respecting the bodies of that level. You already know that. I like it a lot, when the price starts to reject from a level, and the bodies start to respect. Okay, it's the tap to 50, which brings us to where? To the 50 now of the responsible we are mitigating. What confirmation can we use additionally if we don't have a clear flip here? Again, we look for a bullish responsible, and if we want to have bearish trades, we wait for the break of this bullish responsible to let us then that a responsible again of breaking a responsible price returns to it quickly, and with that we get the movement towards there. Obviously, the idea is not to target this. You guys watching this live, your target is going to be here at the origin, because there is also a flip to the upside here. You don't want to fight your own system, so don't aim to break your system. Sometimes, just take advantage of those movements. Take a few points from them and wait for the next narrative. So here it had made this bullish flip, and look how the tap to its 50% was.
The one who gave us the movement towards the person responsible for having broken the responsible.
And how the price keeps going back and forth from area to area, obviously understanding how the order flow happens and what confirmation to wait for to operate in a certain direction. Then comes the execution done. What else do we have here? A lower time frame trend, and here we have a responsible area. There's this. We're looking at this logo. There's this, and there's this. When they're all so close together, it seems like one is inside the other. You know, I like to wait for it to break the area that contains them. In this case, this one seems to me to contain all these others. We expect this to break, and again, there's a responsible party for having broken it. The price quickly returns to it and gives us a brief continuation. So we now have a double top from the responsible party for having broken the responsible area, and that brings us to the flip area. The area where this whole flip happened, which broke the responsible party. But still the price doesn't reach to mitigate its origin. So, we have to keep this in mind. And then the price comes and goes up. Now, what is this? And what is this? A responsible party. To take us out of what? Out of this swing point. So what does this become? The responsible party for taking out a responsible area. And it was unmitigated. Look at how we are working only with responsibles. Because due to the volatility of the moment, you know that when there is a lot of volume, the market is more trending, so we want to work with responsibles, rather than just waiting for sweeps and origins and everything, as it would be in a more consolidated market, which was the case in the morning before this. The price didn't give us that last confirmation by order flow breaking, that responsible for having broken a responsible. So if the price is already rejecting from there, what do we want? To start going short. Again, The same logic we apply here. The break of a bullish responsible. There is the break, a small pullback to the responsible, to the GNS&D responsible for breaking this. It doesn't quite mitigate it. Everything just goes from there. And what we had then, already being from the origin, and in turn, it is responsible for what we have then, further down, without mitigating a while ago, the complete swing area, the swing area that we left since all morning. Price reaches, makes the tap at 50%, and we start again with the bullish distribution. Look at this moment with which the price makes this rise that we want here, then the break of a responsible bearish before starting to go bullish. We have all this area as responsible for having taken us out of here, and having taken out this responsible gives us a reaction. And already the last moment fails to give a continuation. See? And once it breaks it, we can confirm. Now, yes to the upside. And we start to go as far as this first point of origin. And we wait for the break of it to leave us a responsible area. Again. And the break occurs at the same time, with the break of the responsible that had generated this origin for us. Leave over here a new area, which also contains this other small responsible here. So, you know, the same thing I did back here in this. We take the whole area that contains everything, 50%, and from there the continuation is given already, once we leave in the afternoon. Let's check over here what else kept breaking the price. You already know there's no need to guess when you're studying. Just look at the reversal points and see what the price is reacting to. Let's see why this is happening here. Alright, what did we have here? A responsible one again. He is responsible for having made this move, which breaks here. This already goes up. It also takes this out. Everything. That's a responsible one for breaking. A responsible one. And let's see what happened here with him. This takes it out. Good bullish confirmation. And let's see what we can derive from this area as to why the price has reached here and respected it. What is this here also? A trigger, taking this as well. A trigger that took us out of this area. Look how nothing is random in this. Okay. Close with body. Even what is this then? An area responsible for having taken out the responsible. And it has its confluence here. Like with this origin here. Then in a minute, it was visible. This is the lowest point between the high and the new high. It has this confluence here, this small one here. So let's see how the levels fit. There they are. The 50 confluences don't reach 70. I don't take these lows here, because they are before this high. And you already know that what we're looking for is a counter movement. Alright, price crosses the 50, doesn't quite reach the 70, stays on the edge of this responsible one here, with lower temporality. Look how it ends up respecting it by a tick. Those who have seen order flow know how this happens in any temporality when the price is close to breaking something and doesn't break it, especially with responsibles. And that's it. From there, we get a flip, and we have here a responsible for having broken a responsible. We break it. Because of this, the price returns to it, and from there, it goes, and in turn, this becomes the responsible for breaking this. From there, we get a continued retracement to the previous range. We have this again. 50% flip retracement to 50% of the flip area. Didn't manage to mitigate the 50 here. Like this, but no. It just arrived at the train of this area. And then it went back again. And yeah, well, from there, the movement was quite linear, already around here, at 4 p.m. There's no open market for futures, despite the ongoing movement. It can't be traded, so that's a bit of what happened, superficially. You know, if you want to go into more detail, go in 5-second intervals, and follow each movement with the same logic I've always explained to you. I hope you're all well. Leave any questions you have in the chat, and have a great rest of the week. See you later. Bye. Bye.